What is good, friends and neighbors? This Abbas trading hope are doing well. So as you can see, the chart is still running. We are right now in the PM session, and as I said in the previous video, that in the past few weeks we don't really have that much clean price action on in hand session, but therefore PM often delivers. So I learned my mistakes, and instead being here at AM session all the time and getting blue balls, I'm gonna just trade PM. So I found something really nice here. Um, Wait, let me check if there's any. So here's a six sister, also SMT. The price should go up, and if everything works out, eventually then drop down to this low. But anyway, right now we're expecting the price to retrace higher, right? One second. Sorry. So right now, what the fuck was I talking about? So the price should go higher, and eventually, if everything works alright, then drops down to the low. So what happened was we, but so much range. PM, fucking PM. London session opens, build up over this beautiful range, and then let me just delete this. It's irrelevant. Um, did I talk about your last video or in the my brain video? I think I talked about the last one. Anyway, here's a perfect example for it. That when you see the price action kind of give you this range or something this but what's the word that's the like just triangle pattern, but there's a word for it. Like often you see the price consolidating, right, and then boom, it starts kind of just starts to move in the middle from the range, and it delivers to this breakaway gap and measuring gap. I think the 1 standard deviation even got hit here, right? But still, you need to understand this is um, like if you see this kind of close, and on the very next candle you have your limit order ready, right? Boom, you got out at 1 standard deviation, but um, several reasons several reasons why I wouldn't take this trade. First of all, this gap 24 ticks, this gap 17 ticks. Ideally, the first gap should be bigger. Not ideally. If the trade I want to take it, the first gap have to be bigger than the second one. Otherwise, I won't take it. And another reason why it at the end collapsed and reversed on it is because there's no liquidity run on this move, and that is kind of how I know which one is the manipulation, and which one is the real move. Like 9 out of 10, it won't work. Sometimes it will work if um, in some special cases, like there's higher time from order flow working today, and the price just starts to move. For example, we had later today, or at this opening directly break a gap, measuring gap. But if you look down, there's not even clean sales liquidity to take at all. We just open and pushed up, right? And that is just something I won't trade. And if it did not retrace, like somewhere here is one more. Where is it? like all those, like sometimes it will just stay open and don't get retraced into, and then from there on just gonna keep going. For example, here, right? You see all those fair value gaps, it don't get retraced into. Why? That is because the higher time for order flow is very, very strong right now. And if that is the case, um, for example, in today type, in today those type of conditions, you should be very, very careful um, to enter a short, because as I said, the higher time play order flow when it starts to work better, it it goes like the tsunami, and when a tsunami comes, you don't want to stand against it. You want to go in the same direction, okay? And you will get, otherwise you will get wrecked like real fast. Um, there's nothing really interesting here in the AM session. I was not a chart at all, and I paper traded. It was like 2 or 3 minute chart. Maybe three. I can't remember. Anyway, I took a. It was here. It was here, I guess. So on this move, I saw the wait, what the fuck? I can't really remember. Oh, here, and I think I saw my model form on 30 second. Yeah, 30 second was it? Or yeah, here, right? It was not the high quality setup, so I did not take it on my real account. But it's still the, as I said, it's not that high quality, but the logic behind it is still the same. A range, run liquidity, sharp turn, breaker gap, measuring gap, right? Entered here, and from there on the prices kept on going higher, right? Uh, I took partials here, um, somewhere here, like uh, just below new week opening gap is the 1 standard deviation. Also partial at this high. Why? Because if you go to the left, you can see this is the high of the hourly candle. That is how your people, your fucking social media, Twitter people call the candle range theory, time-based liquidity. Simple as that. Also, partials then here at the top of this consolidation range, and also partials. Where was it? At the high, and I left one runner and whatever. But this is not really the trade I want to talk about. Then the price is just kind of pushing higher, not breaking structures at all. Clear buy model, buy program, down candles all acting support, right? And then boom, here we break the structure. I'm like, oh, bet. And we could say this try like liquidity or whatever, but at this point, I'm still not interested in short, because just the place where we turn is just not that ideal for a short. If we turn on like 25%, okay, I will maybe look into it. Or at 50%, yeah, I'll maybe look into it. But not at just the low of the wick. That is just some spot where it should not even reverse at all. So at the end, it also indeed played out that this is only a retracement. Um, we traded down, take out some, knock out some sales liquidity, and from there on we keep on going higher. Then I saw this one, but we can say, yeah, relative equal low, we run that, starts to turn, but I want to see the first fair value gap being bigger than the second one. So I did not enter here. Here also, like the price is grinded higher and there's no clear downside liquidity taking any sort of form, and the price just starts to run again, leaving all this fair value gap behind, and here and here. Here and finally got hit, but you get the point. And finally, I found something really good on the 5 minute chart. So as I said, this was the retrace, right? Then the price starts to move, moving to higher, moving higher, and this high of the week. I'm not pretty. Oh, this is the previous week high. That that will be my drawn liquidity. Then ideally the breakaway gap, imaginary gap should form, um, should start. Kinda ideally should it could be here lower, but it is still good. It started inside of um this like the range of the manipulation. We started there, and if we don't start there, and let's say something like, how much did we run? Damn, something like this, that the price already started and it's just halfway through those fair value gaps. I don't really like that. I will expect like a very fast reaction and very sharp turns and everything. Um, the price trades higher, leaving this two fair value gap behind. Sometimes this happens. So we start with a small one, but then a big one, then a smaller one, then the second one. That is okay in my opinion. Or sometimes we have a big one, a smaller one, and another smaller one. In that case, I will directly enter on the very highest um, fair value gap. Let me. Somewhere here must be an example, but I don't really wanna go down to that too much. But okay, then I was like, okay, let's just see what happens here, because now we're at 25% of the hourly wick, right? And we could turn here if the price is really weak, but it don't really look like that, and we chopped around here a little bit, but at the end we traded down. Okay, we traded down to where the 5 minute busy. Let me look at the 10 minute just out of curiosity. Oh, okay, it's pretty much the same. So we traded down into the 5 minute busy, and I was like, yeah, okay, let's see how the price reacts here. It delivers us a sharp turn. So on the 5 minute chart, it's only a wick. On the 1 minute, it's much clearer. Very sharp turn. We only wick through that a little bit, and then boom, we start to go higher, right? Then I was like, okay, we have all this sales and liquidity taken, we retrace back into a fair value gap, and also this is what you expect. So when the order flow is so bullish, like some obviously that we can see here, you don't really want to see the price retrace to the breakaway gap. In those type of situations, you want to see the breakaway gap stay open, because the order flow is so bullish. We don't need to go like that deep. Like often I even miss out the trade because it won't even get to the measuring gap. It's only gonna be a, let's say, institutional order flow entry drill, like a equal low or whatever. It won't even go in here that deep, and this is what I want to see. This is telling you, okay, we're very bullish. The price don't even need to reprice that low, um, to reach for discount, then keep on going higher. It's very bullish here right now. And then let me just show you the other chart. Wait, like this, boom. And then I saw this trade on 30 second. So it's a very typical model of mine, right? Um, Probably this weekend I'm gonna do a total breakdown and explanation of my model. So you have the accumulation, liquidity, rounds the liquidity, also retracing to 5 minutes. Um, for value gap, right? Immediately starts to turn, sharp turn, very strong, and immediately take out another side of the liquidity as well, and close above the high, right? And then what we have a bunch of value gaps. Um, I wanted to enter here because this unicorn model. Um, I mean, it is the 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 YouTube model, the fair value gaps, right? But this breaker on the left side, lining up with all the fair value gaps, kind of like made the whole trade, the whole situation kind of special. And but at the end of the day, you don't really trade just based on this stupid single breaker, and like there need to be a bunch of stuff to back it up and for you to able to push the button. But I made a mistake. I always take my trade like this and I set my limit order, right? And then I wanted to enter two contracts. So I do this and do this. And then I don't know why, maybe last time I was trading on market, but I didn't pay attention and then I entered on market order. Um, so like fucking really bad price, like somewhere here. But normally I would had traded like this. Uh, Here, right? And then use my standard deviation. Oh, standard deviation is already there. Use my standard deviation 1 1. Right, it's pretty decent. 2R. Um, so the price did not really run that strong. We'll week through it one time, chop around a little bit more, comes down into that one more time, and then boom, immediately the price starts. You know what? Let me go down to the 5 second. I bet there's gonna be the same model also on the 5 second chart. I've never seen the 5 second chart on this trade, but I'm looking at it for the first time. But I think it will be one. Okay, not really. Like this cannot mess it up, but otherwise, if we don't have this candle, it's a perfect one. But like you get the idea how the log, like it's not really even the model, like the logic behind it is just so solid, and you can apply this simply on every fucking model, like on every fucking entry you want to take. Do a fucking OTE breaker, order block, whatever. Like if the logic behind it is it's solid, you have a good job, and you know where we at right now in the marketplace. Are we in a premium? Are we in a discount? Right? Are we? Do we have super heavy order flow? And where's the draw? If you know that, brother, and you see clear liquidity rounds like that, bro, you can enter on everything. Like the entry is the least important thing, okay? And we traded down into that closed in the breaker one more time. Boom, sharp turn, fair value gap, order block. Let me mark it out. Let me just use my white. I like my white one. Acting support, right? From there on, boom, the price shoots up again, close above. Very nice thing to watch. This is exactly what we want to see. And oh, since I got in on the market order, like somewhere here, like super high, um, I was like, you know what, this is not really looking that good. So I'm gonna just uh, close one order here and keep the original stop loss here, but have one cut off one order if the price comes down. And at this candle, it stopped me out at one contract, so now I have only one contract left. And but after that, I see how the price react off this level. I was like, yeah, you know what, this trade is gonna work out. um, Here order block, boom, proportion block, and then I added one more contract here, and the here's the model again. If you go down to a lower time frame, here's the range, right? Retrace to a fair value gap or order block here, starts to turn, breaker gap, measuring gap. It's the same stuff over and over again. And then even here, this two makes this one big order block, right? Or proportion block of this proportion block, still acting support, boom, shoots up higher, took partial at my one side deviation, and have my one more contract as runner, ba, 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 ba. And then we traded higher a little bit, and as for right now, all the down candles are holding support, and I was like, okay, but we're at 50% right now. I don't really want to see the price as any sort of turn. I want to see it be like very strong and disrespect everything. But I can't always get what I want, right? And I saw these two fair value gaps. I was like, bah, you know what? I'm probably fucked. So I saw these two fair value gap, and I closed the trade here as we traded below the wick. And from there on, yes, we traded up higher a little bit more, but brother, I mean, look at the chart. Like from there on, we're basically just consolidating again. And keep in mind, we're at the 50% level of the range, right? 50% level of the wick right now. Like, you don't want to be in this type of situations. We are consolidating at a place we should not really consolidate. Like, either we should reverse here, or we should disrespect and trade on higher. Like a consolidation at this point, it's really not something we're trying to see. So, and that is pretty much it for the day. Um, I haven't touched my account since. I haven't had a real trade. I touched it, I confess, but it's either they're they're all basically break evens, and maybe there's some small trade like I'm up like $10, and um, I didn't really want to do videos about that because it's basically all break even, but slightly more profit. But anyway, um, after a month, it's literally a month, yeah, cause my last my wait, let me check my phone real quick. When was my last video on the 150k series? It was on 30th May, and today is the fucking second. So basically, exactly a month. 2nd of July. Yeah, it's basically exactly a month. I haven't traded the whole June. I haven't traded all break even trades, and now after a month, a pretty good win, right? Right now at $460. And for the people saying, yeah, you should risk more, it's 150 account, blah blah blah. I have multiple accounts. I trade multiple accounts, and this one's only for YouTube, and I'm kind of trying to prove a point here. I have said it so many times, but I just like I rather risk smaller than too big. You get me? And what more important is that some of you might don't know, but with my fund future, there's is this one rule that you can. So all the platforms have this like they call it the buffer zone. So basically, you have a account limit to request a withdrawal, and if it's below that, you can request a withdrawal, and the withdrawal has to be minimum 1,000, 2,000, whatever. But with my founder for with my fund, I almost said my founder forex thing. Fucking hell, my founder forex, bro, they really fucked me over. That was my very first one account, 100k. I saw, bro, it's life changing. I'm making it. And I was like, bro, I'm gonna make my 10K months and reach my financial freedom and everything. And boom, not I blow the account, but the whole firm just disappears. That's crazy. Anyway, um, the funded futures, I mean, they have this one special rule that even though you're in the buffer zone, you can still request a withdrawal. And I mean, it sounds pretty nice, right? And I mean, the minimum withdrawal is um, um, I think six was it 60%? I think you allowed one withdrawal even below the withdrawal threshold, and let me check real quick. Where is it? I took a screenshot somewhere. Bro, I can't find it. But I think it's 60%, and the 60% has to be this so 60% of your whole profit on the account, and the 60% has to be at least $1,000. So basically, um, that means um, you need to have like one point. So basically, that means you need to have 1.6K and to on your account in profits and to request a withdrawal. And yeah, I, I'm not really sure what happens after that, because they kind of have like they have rules written that after that your account will be closed automatically, and there's also somewhere else says after that and what's remaining is gonna stay in your account and you can keep trading. It's kind of confusing, but anyway, I'm just saying, even though maybe I'm gonna just prove the point and ask a withdraw at 100 at 1600 profit and burn the account, close the account. Like, just imagine that, even though um, it's only a $1,000 payout, but just do the math, the risk reward ratio. How much did I pay for this account? It's still a big win. It's still like, how much was the account? I bought it on sale. It was like $50, including um, $50 and no action fee or something like that. But imagine the risk reward. You turn $50 to $1,000. That's crazy, man. So stop annoying me with the whole you need to risk more, and just sit back and watch. And hope you learned something, and have a good trading week. Be careful, right? We have FMC, and we have fucking bank holidays. Damn, what the fuck? We have bank holidays on Thursday, and then Friday directly FMC. So be careful, don't hurt yourself. Yes, good luck and good trading, guys.